Understanding the bullish engulfing pattern. Welcome to today's lesson on the bullish engulfing pattern, a powerful candlestick formation used by traders to identify potential bullish reversals. Step-by-step breakdown of the bullish engulfing pattern. Let's begin with a step-by-step breakdown of the bullish engulfing pattern. It consists of two candles. The first is a bearish candle, and the second is a larger bullish candle. The key feature is that the second bullish candle engulfs the entire range of the preceding bearish candle. This means the opening price of the second candle is below the closing of the first, and the closing price of the second candle is above the opening of the first. Interpretation as a reversal signal. Now, let's explore the interpretation of the bullish engulfing pattern. When you encounter this pattern after a downtrend, it suggests a potential bullish reversal. The reversal signal is derived from the idea that the bullish momentum of the second candle has engulfed and overtaken the preceding bearish sentiment. In essence, it indicates a shift from bearish to bullish sentiment, making it a compelling signal for traders looking to enter long positions. Let's solidify our understanding with real-world examples from different markets and time frames. In this historical chart, you can see clear bullish engulfing patterns marked by the second candle completely engulfing the first. Shortly after these pattern formations, the prices started significant uptrends, validating the bullish engulfing pattern's bullish signal. To sum it up, the bullish engulfing pattern is a strong bullish reversal signal that occurs after a downtrend, indicating the potential for a shift to a bullish market phase. Keep an eye out for this powerful formation in your technical analysis for potential bullish opportunities. Thanks for watching.